Hi all, welcome to i-tutor Academy. In today's session, we will start with the Unit 2 of MMPC 010. That is the FAME, stakeholders, objectives and decision issues. And in this unit, objectives are understand the rationale for existence of FAMEs, understand the concept of economic profit and accounting profit, appreciate the use of opportunity cost and differentiate between various objectives of the FAME. These are the objectives. Structure, there is an introduction part, objective of the FAME, value maximization, and alternative objectives of the FAME's goal of real world fame constraint, basic factors of decision making, that is incremental concept, and the equi-marginal principle, the discounting principle, opportunity cost principle, the invisible hand, summary, and self-assessment questions also there in this unit. Okay, so let's begin with the introduction part. The FAME is an organization that produces a good or service for sale, and it plays a central role in theory and practice of managerial economics. In contrast to non-profit institutions like the Ford Foundation, most FAMEs attempt to make a profit. There are thousands of FAMEs in India producing large amount of goods and services. The rest are produced by the government and non-profit institutions. It is obvious that a lot of activities of the Indian economy revolve around FAMEs. And one of the crucial determinants of a FAME behavior is the state of technology. Technology imposes a limit on how much a FAME can produce, and it is the sum total of society's pool of knowledge concerning the industrial and agricultural arts. Production is any activity that transforms input into output and is applicable not only to the production of goods like steel and automobile, but also to production of services like banking and insurance. And the FAME changes here input into saleable output. An input is defined as anything that the FAME uses in its production process. Most FAMEs required a wide array of input. For example, some of the input used by major steel frames like XYZ or ABC are iron ore, coal, oxygen, skilled labor of various type, and the service of blast furnace, electric furnace, and rolling mills, as well as the service of the people managing the companies. To give another example, the input in production and sale of chart by a street vendor are all the ingredients that go into making of the chart, and the stove, the carrier, and the service of the vendor. And the input or the factors of production are divisible into two broad categories, and human resources and capital resources. And the labor resources and entrepreneurial resources are two human resource input, while land, man-made capital, forest, rivers, etc. are the two capital resources. Thus, the four major factors of production are land, man-made capital, labor, and entrepreneur, while the remuneration they get is rent, interest, and wage and profit respectively. And the function of the FAME, this is to purchase resource or input of labor, service, capital, and raw materials in order to convert them into goods and services for sale. There is a circular flow of economic activity between individuals and FAMEs as they are highly interdependent. And labor has no value in the market unless there is a FAME willing to pay for it. And in the same way, the FAME cannot rationalize production unless some consumer is willing to buy their products. However, there is some incentives for each. FAMEs earn profit in turn, satisfying the consumption demand of individuals, and resource owners get wage, rent, and interest payment. In the process of supplying the goods and service that consumers demand, FAMEs provide employment to workers and also pay taxes that government uses to provide service, education, defense that FAMEs could not provide at all or an efficiently. Essentially, a FAME exists because the total cost of production of output is lower than if the FAME did not exist. There are several reasons for lower cost, and firstly, long-term contract with the labor saves the transaction cost because no new contract has to be negotiated every time a labor is to be hired or given new assignment. And secondly, there are government regulations like price control and sales tax also saved by having the transaction with the FAME. And recall that sales tax is levied for transaction between firms and not within the firms. When transactions take place within a firm, they may be cheaper and hence such savings decreases the total cost of production of an output. And in other words, the existence of firms could be explained by the fact that it saved transaction cost. And however, the size of the fame has to be limited because as the fames grow larger, a point is reached where the cost of internal transaction become equal to or greater than cost of transaction between fames. And when such a stage is reached, it puts a limit to the size of the fame. Further, the cost of supply addition services like legal, medical, etc. within the fame exceeds the cost of purchasing these services from other fames, as such services may be required occasionally. And let us consider the size of different kinds of fames around us. Try to understand the reason for such differences. Okay, and fames are classified into different categories: private sector, public sector, joint sector, and non-profit fames. Okay, so here is a figure: interdependence, consumers, and fames. Here is product market, so goods and service, and then it is fame is there, factor market is there, consumer is there. And fame can also be classified on the basis of number of owners: one person company, partnership, and corporation. And some fames mentioned below are different from above. They may provide service to a group of clients, for example patient, or to a group of its members only: universities, public library, hospital, museum, church, voluntary organization, cooperatives, unions, and professional societies. And the concept of a fame plays a central role in the theory and practice of managerial economics. It is therefore valuable to discuss the objectives of a fame. And next is objective of the fame. What are the objective? The traditional objective of the fame has been profit maximization. So they need profit, of course. It is still regarded as the most common and theoretically the most plausible objective of the business fame. So we define profit as revenue less cost, but the definition of cost is quite different for the economics than for the accountant. And consider the independent business person who has an MBA degree and is considering investing 1 lakh in a retail store that she or would manage. So there are no other employees, and the projected income statement for the year as prepared by the accountant is here. So this is that. Okay, accountant prepared the sales is this much, and for less cost of goods sold is this much, like that. And the economists recognize other costs defined as implicit cost. So these costs are not reflected in cash outlay by the firm, but are the costs associated with the foregone opportunities. Okay, so here also one more table is here. So this the income statement should be amended by the following way in order to determine the economic profit. So that is like economists recognize. And so this way we can say that economic profit equals the revenue of the firm minus its explicit cost and the implicit cost. So to arrive at the cost incurred by a firm, a value must be put to all the input used by the firm, and money outlay are only a part of the cost. A businessman, as per businessman, there is only the profit is the main core. And profit plays two primary role in the free market system. First, it acts as a signal to producers to increase or decrease the rate of output and or to enter or leave an industry. And second, profit is a reward for entrepreneurial activity, including risk taking and innovation. In a competitive industry, economic profit tended to be transitory, and the achievement of high profit by a firm usually result in other firms increasing their output that product, thus reducing price and profit. Firms that have monopoly power may be able to earn above normal profit over a longer period. Such profit does not play a socially useful role in the economy. And although a profit maximization is a dominant objective of the firm, other important objective of the firm other than profit maximization that we will discuss in this unit. Okay, so here is six. One is maximization of sale revenue, maximization of firm's growth, and maximization of managers on utility or satisfaction, making a satisfactory rate of profit, long run survival of the firm, and entry prevention and risk avoidance. Next is value maximization. So what is value maximization? Most fame have sidelined short-term profit as their objective. Fame are often found to sacrifice their short-term profit for increasing the future long-term profit, and thus the theory states that the objective of a fame is to maximize wealth or value of the fame. And the example is here with the equation and all. Okay, so determination, here is one figure, determination of the value of the fame. So value of the fame, and here is the equation based on that. So please refer your IGNOU study material and you will get more idea. And so this is about today's section, and for more sections we will discuss on next video. And for more MBA series, you just do like, share and subscribe our channel. Thank you so much.
i-tutor Academy presents IGNOU MBA Complete Syllabus Coverage Classes for individual students, semester-wise subject with online flexible timing. For more details, contact on +91 623 827 1885.